Hello, welcome to the broadcast. I'm not sure if I'm actually live. If you can hear me, just let me know down below. Just drop and I can hear you. And well, I can see it now. So we're officially live. Hope y'all are doing amazing out there. Wanted to come on and do my market update and kind of talk to y'all about where I think the market's at, where I think it's headed, what we can do, what we can expect, and everything in between. As always, if you have questions as I'm talking, and if you have questions after I'm done, just post them in the comments and I'll go through there as I go through this stuff. And I will make sure that I get to all the questions and I'll answer everything that y'all have for me. So there's been a lot of cool moves on Bitcoin this last week. We've seen it go from basically a place to where it was near its bottom to pumping back up in the 40K plus range. And what we'll talk about today is a little bit of my understanding of why it's happening. I talked to you last time about the idea of the CME cycles and the problems associated with derivatives, and then the sort of keeping it down and manipulating it so that way they can pump it and they can catch it and they can ride it so they can win in the derivatives and they can win with coins. And that's exactly how it played out. Right up until Friday when CMEs expired, they had it held right at that 39.2 zone and then let it go. And then it did whatever it wanted to do and move normally after that. So just know that the market does move in a very manipulative fashion when the people who are manipulating the market want it to, so they can hit what they need to hit and then they let it go and it operates naturally. But let's kind of go through what I'm seeing on coin market cap today and look at what some of the solid moves are. So obviously Bitcoin in the last 7 days, 18% up. That's amazing. So you can obviously see we had a little pump and now we've been riding sideways, and I'll kind of talk to y'all about what this looks like. Ethereum, same thing, 14% up. We have everything's basically moving. BNB is finally moving up a little bit. We've got across the board, Terra Luna is the winner, though. There was so much bullish news for Terra. That was Anchor Protocol getting the 500 million in cash reserves. That was the $1 billion in assets backed for Terra. There was they sponsored a professional baseball team, I think. So Terra just had good news after good news after good news, and it pumped that thing up. My last buy zone for Terra was like $72, and it obviously pumped way past that. We are like $9 below the all-time high. And if it does pump past that 100 and it holds above, which means Bitcoin behaves and continues to move as well and doesn't dump. But if it hits that 100 and Bitcoin behaves, it probably pushes Terra near the 130 zone and maybe even to the 150 zone, should it be able to pass that 130 zone. But that's probably the biggest winner of the week by far of coins that are stable and not like trash coins. Everything's basically moving well, though. I did notice we had some pretty decent moves on Phantom, Polygon. I mean, you really can't go wrong right now. The big thing, though, that I'll talk, Cosmos. There we go. There's another one. So we had Luna, and Cosmos has been this, like, I don't know, people don't give it enough credit, but it's a sleeping giant. The Cosmos network is awesome. You get on osmosis. You basically don't pay any gas fees. Like, it is a legitimately awesome coin. And I think it's a legitimately awesome project. And it's in a really good position. I mean, 30% up. It's almost as much as Terra. So another really good pump, and Cosmos, I think, is really close to being in a decent buy zone. Another one with Near is another really good blockchain. And if you'll notice the trend, these layer ones are the ones that are really pumping and moving hard. So you've got like Terra, which is the layer one. You've got Cosmos. We've got Polkadot, AVAX. AVAX has kind of lagged this week. Normally it doesn't. AVAX is actually a pretty hot project. So that's interesting to me. Sol, I think it does well. It's just having a lot of problems with not being able to keep the protocol up and operational. Near's always lately has been pumping. It's been looking good. Algorand hasn't moved very much. Gaming hasn't moved. Phantom, the next one, Phantom's, in my opinion, one of my favorite projects and one of the most undervalued projects. I mean, you look at Phantom, it's number 31. It's got like a 4 billion market cap. And Phantom over here in DeFi Llama is number 4 in terms of its total locked value of 12 billion. So it surpassed AVAX, it surpassed Solana, it surpassed Polygon, Polkadot, everything. It's surpassed Near. All of these things, Phantom is above now. It's just, I mean, it's dangerously close to surpassing BNB, and it's not super close to Luna, but it's on the tail. So, I mean, the fact that it holds this much, and the fact that the change across the board, even in the month, has been highly positive for Phantom. The only one really beating it out are like Luna with the 83%, and we've got Osmosis over here. but it's just incredibly undervalued for where it's at. So when you look at Phantom over here, it's got that 4 billion market cap, and we looked over here and it's surpassed AVAX, and AVAX's market cap is way up here at this 20 billion. So, I mean, you can see how much Phantom has, how much room it has to move. So 4.8, so it can go all the way up. I mean, I would consider it to be, it should sit up here with the big dogs in like the top 10 because of the amount of good developers it has on the chain, the amount of good things it has on the chain, and just the amount of good things going with it. It has had a lot of big projects launched recently, like SolidX, and it was the Solidly platform and the SolidX and the OX DAO or whatever. And those have made the chain pretty congested. So gas fees have gone from like a penny down to like, sometimes they're a couple dollars, which is dangerously cheap still in comparison to like Ethereum, but it is going through a lot of congestion right now. So right now may not be the best time to like try to dive and ape into it. But I think it is one of the protocols to watch and one of the protocols to pay attention to because it has so much room to move. So after all that, it's one of my favorites right now. It's one of the things that I have a lot of stuff moving in. Like, and when we get in the markets like this where we're at, I will farm stable coins. So that way I'm not in a volatile asset. I'm just farming stable coins, getting rewards, putting it back into the stable coin farm. So that way, when we do go into a bullish market, I can deploy those stables, and I haven't gotten in and gotten wrecked with a bearish market that keeps pumping down. And so it's been a pretty good strategy for me to stay safe and to not get wrecked in this market. So that's kind of what I wanted to go over in terms of the market update. And I think that's really what's looking good in terms of things moving. Thorchain's looking pretty good. We had a big move by Waves. So, and I think Thorchain's pretty undervalued as well. So that's another one to look at. But outside of that, let's look at Bitcoin's moves. Obviously, Anchor Protocol, the platform that is essentially is tied to, is in the Luna network, had a massive moves because of all that bullish news. But let's look into Bitcoin's price moves. But outside of that, let's look at the blockchains that are producing the most. Obviously, Ethereum, 114 billion, 54%. No one's even close to Ethereum. No one's even like kind of close to Ethereum. So nothing's really catching up. There is no Ethereum killer yet. There's a lot of good competitors because people don't want to pay gas fees on Ethereum because it can be so expensive. But as you can see, Luna is creeping up. Luna's creating a pretty big lead ahead of everyone else. BNB's kind of always just been there. Phantom's creeping up dangerously close. I could see Phantom surpassing BNB fairly quickly. I could see AVAX coming up and surpassing Binance Chain. So I think these ones, Phantom and AVAX, are the ones that are going to move up, and it's going to end up being like ETH, Luna, Phantom, AVAX kind of challenging each other. We'll see Matic start to creep up as ETH starts to creep up again because it scales ETH. And then outside of that, I think those are the big ones to look at. I like Harmony quite a bit, and Near, of course. Those are kind of moving up. But let's look at Bitcoin and see where it's moving. So let's get rid of some of these charts and rainbows and bands and stuff like that. But what I first want to look at is just kind of where we're at. Let's look at the monthly chart let's look at the monthly chart. So I have these rainbow regression bands on there, and I think they're interesting. I was actually looking at them the other day. We've actually been stuck here, and we broke out once and fell through. Now we broke out again, and we might test it. We might go down to 36 and test it again. But what we've been sort of stuck in is this range right here, this sort of like, at this point, it's like this 33 to 45 range. We've been stuck in this band, which is kind of like no man's land. If we go below and end up in this band, that sort of puts us in like bear territory. And then if we go above this band, it puts us in a pretty heavy bullish spot. So that's kind of where we're stuck. We're stuck in make a decision land. So you moves from up to the 45 point and down to the 33 point are fairly healthy. I mean, we've seen our ability to bounce off those points a few times, like right here, bottom, a little bit higher, and now we're where we're at now. But one thing that I found that was interesting is if we do clear this, it does pave the way to push past right here, which is our 200-day moving average. So when we look at the 200-day moving average, that's pretty indicative of a bull market and a bull market cycle and being able to pump. So if I turn off these rainbow bands, you can kind of see that when we had the big pump here, we were above the band, then we fell below it, went into that mini bear market last summer. and then we pumped above it. We cleared that new all-time high. And then when we fell below it, we fell. So whenever we're above that, we typically have a pretty good bullish move. We have a pretty good bullish momentum. So where we're at, you can see right here, we were above it, bullish, fell below, bearish, above it, bullish, fell below, bearish. And you can also see on these logarithmic bands with where we're at right now, whenever we're in a band and in a channel, like, let me turn some of these off so it's easier to see. Whenever we're in a band and a channel like this, as soon as it sort of breaks through the barrier of one of these bands, you'll notice that it just completely tanks and then it falls straight through, and then it'll try to catch again and fall straight through. So as soon as it loses its sort of hold on these bands, it falls straight through and dumps. And you can see it right here. It kind of started to challenge this band, fell straight through, and it dumped straight through into the sort of bear market zone. Same thing over here. We start to come through and challenge. And then as soon as we challenge and clear, we tend to clear new all-time highs. So with where we're at right now, with what I'm seeing and what I think, there's a good chance that if we can clear this zone right here, this 45.9-ish, we have a pretty good shot at coming up and clearing at least 66. We obviously have to push through that 200-day. And if we clear that at that 49 zone, then I think that gives us the opportunity to challenge and move to a new all-time high. And when you can see on this bull market support band that I have here, that's kind of right where I marked. So that's the 200-day, and then that's the bottom of the band. And so when we look at these, what we really want to pay attention to is, notice how we've tried in the past, and every time we lose this, we fall straight through. But we pumped, we got shut down. We pumped, we got shut down, but we came back, and then we're pumping again, we're getting shut down. So what's happening right now when we look at the daily, is we're essentially just stuck right here. It's going to make a decision and a move. You can see back here where it did it. So we fell straight through, and then that took us all the way down there. Then it came back up, it challenged here, went down, challenged again, and then we essentially went and got a breath of air to come through. We fell through this 200-day, which is indicative of bull markets. As soon as we fell through that, we basically dumped. Then we dumped through this support line here, and then we put us in this little bear market zone, and now we're in the same zone. So now we're creeping, and we tried right here to kind of get close to it, failed, went to recoup, failed again. So you'll notice there was a high and then a lower high. And then we fell through, went down to make that new low around 34, I believe it was, somewhere in that area. And then now we have this pump. So now we're doing sort of the same thing. So we're in this spot where right here we've tested it, right here we've tested it, and we've been sort of rejected twice. So now we're on this third day of testing. And if you look in the back, we could be testing this for like 1, 2, 3, 4, 5 days to be able to push through it. And then if we do push through it, it's going to probably retest and either bounce up or retest and fall straight through and go back down. So we want to pay attention to that. And if it comes through and it retests and it does bounce off that and comes through, it's going to hit right here, and it's going to test again in this 49, probably going to get super choppy. Then if it pushes through this, it's going to retest. And then if we clear this, it's probably a good zone to push to where we might be able to challenge the previous all-time high. And if you look at these regression band, these logarithmic bands, this is kind of this band here, this zone is the end is right here. And so if we can clear that and we can move past this zone, let's go into the monthly. So if we can clear that and we can move past this choppy zone right here, what'll happen is we'll push here. And if we can clear this and we don't get shut down, it's going to pave the way for us to come up and challenge 65 probably at that band, which again, will get choppy, and then we'll push through and test. And if we challenge that, it puts us in a place to challenge 83. So that's kind of the pathway that I would see. I like to always err on the side of being bullish, but obviously you have to be prepared for anything. So if we keep pushing this thing and we never do clear it, expect it to dump down really hard. Expect it to probably push down 36, 38. Maybe it won't clear another bottom, but expect it to go back down to that zone. If we do clear this, then expect it to be real choppy right here. Like this could take a while to get through all this chop. So expect it to be choppy, it to come up, clear, come up, clear, come up, and then finally clear. But once we do clear this, the initial celebration is like this 45, 46 zone. And then the second celebration is clearing this 49 zone. If we clear both of those, that paves the way to really, really push up. And if you'll notice in the past, when we've done that, it's put us in a pretty good zone. So over here, we pushed past it. We went to retest, fell straight through, pushed back up, fell straight through, went straight down, and then came back up and now finally challenged it. And once we finally challenged it, notice when we finally held support above it and retested it, that gave us the momentum to clear this all-time high here. So that's kind of the what you can expect for the market. Right now, we're basically in a gray area. We need this 43, 44 zone we're sitting in to clear and push past 45, 46, test that zone, then to clear and push past 48, 49-ish, test that zone, and then it should be able to pump up pretty hard if we can clear both of those and stay above. Remember, just clearing it doesn't mean it's going to stay there. Clearing it means going up, coming back, testing the line, coming back up to the next one, testing that line, and then coming back up. That ultimately puts us in a good place to be able to actually push through and actually create the momentum that we need. So the other interesting thing I wanted to look at here was though, when you look at sort of the idea of diminishing returns, let's go back to 2013. You can't even see it on the cycle anymore, but let's go back to 2013. So notice in 2013, we essentially had this one pump. We had this one pump. It went up. It cleared that support band. It went all the way down to test it and then pushed all the way up and then pushed, tested. We fell through it. And then finally, but when we did pump, what happened was we essentially had one giant candle that just went in 1 month. It went from $200 to about $1,100. And so that happened in 1 month. But notice that it went to the top of this, like literally in the red. So now let's go over to the 2017 cycle when we hit that. So remember, this one cleared the very top in the red. Then when the 2017 cycle hit, what happened was we cleared this, and then notice this one took several candles to clear. So it was August, September dumped, and then October, November, December, it finally cleared and pushed above. And this one only stayed above for a fairly short period of time, but notice how this one cleared into this zone. So the first one was red. Then we went down essentially 1, 2 into this one. And then notice this current one we're in, and then this one kind of came back. So this was the 2017 cycle. So we cleared into that one. But then notice in this one, so first one was red. Then we went down 1, 2 when we were in this one. Now in this one, we went down 1, 2. And technically, we didn't even make it this one. We made it to this one. So if the idea of diminishing returns was there, and we do have diminishing returns across the board as Bitcoin becomes bigger and as crypto gets more adoption, as people get more ingrained in it, we might see it have less and less of these blow off tops and more of these little peaks like we're seeing now. And each peak becomes smaller and smaller until it's not so volatile. And so that's kind of what I saw. The first one was here, and then 1, 2, and then we went here. Then you could say 1, 2. So we could say that the blow off top or another peak in this cycle could be in this zone or in one of these two zones. Or maybe the law of diminishing returns, or maybe it says we go down 1, 2, and then 1, 2, and then maybe this one's 1, 2, 3, and maybe our next one is in this zone. So then what that looks like is it puts us in a place to where I would see us being able to, if we cleared into a new all-time high, we would probably have a zone of like 109 up to about 185. Because we go here and then 1, 2 fell and then 1, 2, and then it puts us in either this one or this one. So we clear this first one that we've already been in, but then that puts us in a likely zone, maybe even saying that well, let's be conservative. So let's say 108 at the low and then 187 at the high. If we have diminishing returns across the board and we don't have big blow off tops like we did in 2013, we have a little bit of a smaller one because we had several. Kind of something I was thinking about, and I think that might make sense because we've moved from the first cycle was here, and then we moved into here. Now we're moving down over here. And we've hit this one. So it could be plausible to say that we could hit the top of maybe this one and put us in that zone, which is still in a pretty good spot in between the zone. But that's kind of what I'm looking at and what I'm thinking for the end of this, if we do have another big peak up and we are able to clear this sort of support area. So let me know if you have any questions about that. And you can see it over here as well. When you look at the 2013 cycle, we had the first little peak, which was right here. And it went into the red. We had the second peak that went way outside of it. And then we had the bear market, long bear market here. Then we had the 2017, which didn't quite clear as much. And then we moved into 2019. And then 2020, we're still sitting here right in the middle. We haven't really cleared anything that you could consider like a parabola top, which is in the red. And so maybe we originally had the big one, and then it's a little smaller, and then it's a little smaller. So now we end up in the yellow. Or maybe we do have another blow off top. But for me, I'm kind of thinking that we are going to follow this zone and kind of follow this sort of diminishing return pattern that we've been sort of exposed to in Bitcoin up to this point. So let me know if that was helpful, or and let me see if you have any questions. I'm going to check the chat to see if there's any questions thrown out. If you have any, just comment down below. I've got one person paying attention and watching, or a few people watching. So, and then a lot of people are asking, like, what am I doing right now? So there's a couple things that I'm in that I'll show you all. Let me load it up. And I was talking a lot about like stable coins and stuff like that. So I talked a little bit about this last time, but there's a few different ways to sort of play with stable coins right now. And I think the best strategies that I like right now are, I like 100 Finance on Phantom quite a bit, because I can go in here and I can single stake stable coins. So I can get 11 to 28% on MIM, 6 to 17 on DAI, 5 to 13% on US dollar coin. And then I can essentially borrow against it. So if I get 11%, I can go borrow against it for 2%. Then I can take what I borrowed and I can put it right back in. So now I'm essentially doubling my effective rate of APY by borrowing against it, minus 2%, which isn't really that much. So if I'm making 11 minus 2, it puts me at 9. Then I go borrow against this. Then I'm going to go put it back in here, and I'm going to essentially double my effective rate. Just want to be careful you don't get liquidated and stuff like that. Be careful. This isn't financial advice, of course. The other one I like quite a bit that I'm doing a lot in is Liquid Driver. So Liquid Driver, I think, is pretty neat. What I like about this one is it has one great stablecoin farm. You have this DAI US dollar coin, and DAI's pretty new, so be careful with it. Use it at your own risk. It's a newer stablecoin, so it could fall off peg and fall apart, but it's 39% APY, which is really good for a stable pair. These both stay at $1, so you don't have really a lot of risk of downside here. So you get 40%. It is paid back in Liquid Driver, but what I do is I usually take the rewards from this and I'll put it back in the stablecoin pool, so I'm compounding, or I'll go over to Beats and I'll put it in Beats. There's a pair in there. I'll either use the Pirate Party pair, or I'll trade it for something and get Beats, and then I can trade my Beats, and then I can put that back into this pair if I sell them. So I can create like these circular looping strategies where the base, where I get most of my rewards from, is a stable pair. So that way the rewards I get and the things I'm putting into other things is money that I've actually earned. So it's money that I can play with, because it's not money that I essentially put in out of my own pocket. The only money I put out of my own pocket is here from the other assets I have. The other one that's really neat that you should probably be careful with, if you look at, that I'm using a little bit now too, is Taro. I think it's really neat. If you're in the US, you have to use a VPN to use it. But they have a lot of cool stablecoin farms. And the neat thing about this one is you can play with them on leverage. So for example, you can get in on this, like, let me find a decent one right now. And they are very variable. So don't ape into this one. Like take this and then watch it for a few days and see where this goes, because you can end up getting negative and you can lose money and stuff in this one. But you can do like US dollar coin and DAI, which is two stable coin pairs. You can leverage it up to 10 times. You can get 30% APR. And when you leverage something at 10 times into the stable coin, your liquidation point is going to be like 60 cents and $1.50. So stables don't go that far out of whack. So you're not only going to get this fed back into your stable pair, but you're going to get their coin rewards too. So then you can take your coin rewards, sell them and put them back into this pair, or put them somewhere else and utilize them. Sometimes I'll take the Tarot rewards I get and I'll go put them in Beethoven or something like that, because there's the APY over there, and then I earn that, then I can sell that, put that back into my stable pairs. Then when the market passes that 46, 48 zone, then I can take all my stables and I can deploy them into the market and actually use them that I've been accumulating and creating wealth out of during a lull period in the market. So that's kind of what I'm looking at, what I'm doing. Hopefully that's helpful. But that's pretty much all I have to say today and all I wanted to talk about. Let me know if you have any questions. Drop those in the comments down below and I will go through them. But that is it. I hope you all have a great day, and I will talk